Good afternoon, everybody, and welcome to this week's weekly market analysis class, Monday, the 26th of March. Before we get started, as always, please understand that any advice in today's session is of a general nature only, and that your personal circumstances have not been taken into consideration. All right, let us kick off. Let's have a look at what's happening this week. It is an extremely light week in data as we lead into Easter. So let's just talk about, essentially from the data that is out this week, the highlights or the ones that have the potential to affect the market the most is going to be the GDP numbers from the US and the GDP numbers from Canada, respectively. One's on Wednesday, one's on Thursday, and leading into the long weekend. Now, I guess the flavor of the week, and which is leading into this week as well, is the US tariff situation and the tariffs that they've imposed on Chinese imports, which is essentially sparked off a little bit of a trade war between arguably the two biggest nations from an economical point of view in the world, China and the US. China did respond late on Friday with only $3 billion worth of tariffs, compared that to 50 billion, which was imposed by the US, which would affect China. Now, that 3 billion is pending further negotiations in Washington, and it could build up to a higher number than first broadcasted. Essentially, this has affected our own Aussie dollar, as we have very close dependency relationship with China, and when China's being affected, well, then it's affecting our Aussie dollar as well. Now, during these times where we do have volatile currency situation, investors tend to move their money to what we call safe currencies or safe haven type currencies. Generally, the Japanese yen and the Swiss franc are considered safe haven currencies. So these currencies will get a bit of an injection, a bit of a boost, and consequently we did see the US yen drop through key levels as money moved away from the US and moved towards the Japanese currency and the Swiss francs. Now, this week's data releases, as I've said, will not play a major role, as Friday the equity markets are closed globally. Currency markets still operate, but they'll be very light on volume. So leading into the weekend, it's almost like we're just oozing this week into a long weekend. So in terms of data, there's not much on the radar. So let's move forward, bring up my charts, and let's see what we have on that front. Okay, so let's kick off with the Aussie dollar. Let me just get my bearings on the charts as I need them. Okay. Well, as we said, with Aussie dollar's taken a little bit of a hit due to what's been happening with the US imposing those tariffs on Chinese imports. It's affected China. It's also affecting our dollar. We have produced, it's not the most traditional looking inside candle setup, but we have produced an inside candle situation across. No, let me zoom in a bit better. This is a little bit tight. Across these two candles over here. Okay, so in theory, if we are in downfall and we come in there, we've produced what we're looking for, and this would be the continuation of the trend. Now, I don't actually think this will trigger. It looks like today's candle may cross higher than Friday's peak, which would basically cancel it out. But the way it sits right now, it still is an inside candle setup. Now, can I just get a show of hands? Has anybody actually got a pending order on this particular setup right now? Can just let me know if you do. And did everybody notice it? Did we see this setup? So no one's come forward with a positive there. So Alright, so what I'm going to do is I'll use this as an exercise to show you how to place the pending order with my mini terminal and how to size the trade. So for those of you that don't know how to do it, it's an opportunity to have a bit of a look how I do it. So essentially, just to talk you through it, again, these two candles here, which was Thursday's candles and Friday's candles, essentially set up an inside candle, meaning the little doji looking one is inside of the red one. Let me just double check the low of that candle. Give me 1 second. The low here is 76.86.5, 76.86.4. So it's just inside. So it is an inside candle. I just wanted to double check it. So the way that I'm going to set this trade up is at the break of the low, which I'm just drawing a line there. At the break of the low, I want to become a seller, meaning that I want to continue with the trend and I want to short this position. Now, should the current candle, which is already a good 6-7 hours into its into the day, should that candle cross the top line, well then you got to go back and cancel out your order. Okay, so that's very, very important that that happens. So at the moment, what I'm going to do is my computer wants to restart. Just got to cancel that out. Okay, so what I'm going to do is I'm going to place the pending order. The stop, the way that I would do it, so the entry would be at this level here. I'll just draw a line. The stop would be just up there, and then T1, which is your first target, your 1-to-1 ratio would be there. Now whether you decide to take profit there or not, that's up to yourself. And T2 is roughly about here somewhere. Now I'm doing this visually. I'll measure it out properly in a second, but just so that you understand. So for those of you who have been following the daily call statistics, typically what I'm doing is if the trade reaches the 1-to-1 point, what I'm doing is at that point I'm grabbing the stop and moving it to the entry level in order to turn that into a break-even trade on the second half of that trade. So the first target, if it hits that level, I've taken 50% of my profit at the 1-to-1, and then while I'm chasing the second target, should it not happen and come back and stop me out, well, on the second half of the trade I'll actually make zero. Okay, so that's the way that I've been doing it. So let me just set it up right now, and I'll talk you through it. So the first thing I want to do is I want to bring forward my mini terminal. This is the one that I like to use. Hang on, let me turn on my auto trading, bring it across, click OK, and we'll notice now I've just installed it into my platform just before the lesson started, so I don't know what these red lines are, but anyway, it's something new. It looks like it. I'm not familiar with it. I don't need it in any case. So the way I'm going to do this is first I want to measure how far I am from the entry level right now. So the way that I do that is I'll put my crosshairs where I want to get in at. Let me zoom in more so that I'm super zoomed in so I'm a bit more accurate. So this is where I want to get in at, roughly where I've got the line, and currently right now I am 37 pips away from that level. So what I do is I click on this little button here. It pops up this window. I'm interested in selling, and it's a sell stop because it's selling at a price which is away from the market in the direction that I want to go. The entry I said 37 pips that's how far it is from where I currently am. Now I'm going to choose fixed cash risk, and here I can specify how much money I want to risk on this trade. So let's just say I want to do 250 as an example. Then once I'm in the trade, this is where it would trigger, where I'm showing you right now. My stop from that distance up to here it's about 100, I'm just going to make it 105. So turn that to pips, put in 105. And what I do is on my take profit side, choose pips as well, and I'm going to choose the second target, so T2. So I'll double it, so that's 210. And then I can choose to do whatever I want at the first level, and I'll show you that in 1 second. All right, so any questions so far right now before I place this order? If anybody's confused, come back and watch this little section again. I've also got videos on it in the library that you can get access to and have a bit of a look. So here I go, I'm going to place it and notice what's happened. Let me zoom out again so we can see it a bit better. So my green line there, that's my trigger. There's my stop. And this level here is my 2 to 1 level, which was 210 pips, okay, which I measured out. All right, so now if I show you this section here, you can see here's the trade, and it's automatically sized it for me at 0.18, which this should equal approximately that $250 risk that I wanted to take. Okay, it's already worked it out for me on its own. Okay, now 1 second, there's a question. Yeah, I can do that, Rav, give me 1 moment. So Rav wants to see how it looks on a trend line as well. So that is possibly give me an argument to look at the trade in that direction, but I feel that if I wanted to trade in this direction, I think this is why Rav's asking me the question, I would have been looking to trade it off these 2 candles, but they didn't give me a setup, so that takes it off the table. It did push away, and now it would be, it's not the most typical looking inside the trend trade, but that's essentially what we've done. Now, I honestly don't think it's going to trigger. I think we're going to break the top of that candle, and when that happens, you've got to come back and cancel this trade out. So I'm more using this as an example to show you how to place the trade with the mini terminal so that you can do it for future reference. So there you have it. If I want to take out my level here, my T1 level there somewhere, okay, which let's say at 105 pips, the way that I do that is, give me 1 second. If I want to automate it completely, I just want to open up a new chart and I want to drop a trade terminal onto it. Now, these are all from the MT4 Supreme, so you've got everyone's got access to them. Let me just minimize it a little bit. Okay, so there's the order that I've placed over here. So what I'm going to do now is I'm going to hit the little hammer sign, do an automatic close, create. You might need to go back and review this again. And the first line, when order profit in pips is greater than or equal to, now T1 is 105 pips. That's what we measured. Okay, so when it's equal to 105, then here click close percent and let me close out 50% of the trade. If I also want to move the stop to break even, I'll click on this one, also set the stop loss to, and I've got whatever number I've put in there, I have to put in here to make it break even at 105. And then I click apply the rules. Notice the color of the hammer here before I click it. When I click it, it changes. Now it's gray. It's now in operation. So essentially, what it's going to do, let me bring that chart forward. If I just leave this, let's say if it comes down and triggers me, I'm in the trade. When it reaches here, which is 105 pips away, what will happen is it'll close 50% of that. So it'll close out 0.09 of that trade will get closed out, and 0.09 will remain open, and at the same time it's going to grab the stop and push it to the entry level. Okay? Does that make sense for everybody? If it does not, and it's a little bit too advanced for you, that's okay. Just come back and watch it later so that you can reference it. A couple of questions. The trade terminal, can you set up both? Yes, Dennis, yes. I saw your question late. I've just explained it. You can set up different profit levels at anywhere you like. Okay? Paul, the computer does need to remain on. All right. So for you guys, it's very, very important that your computer must remain on because MT4 Supreme does all the algorithm on the local computer that you're on. So it's not an order that is sitting with the broker's server. Okay, so at the moment, the only orders that are with the broker right now, let's say your computer did turn off, this stop loss is with the broker. So the stop is, they've got it, so it will stop you out. And this target, which is that one there, the 2-to-1, is with the broker. So if your computer turned off, this is all that it's got. If you wanted to do the in-between part, the computer has to stay on. This is why I've shown it to you the way that I have, just in case your computer goes off or you have an issue, your original stop is in place, and it essentially is just a straight out 2-to-1 type trade. Okay, that's why I show it the way that I do, to protect you guys just in case something happened. All right, but ideally you want it to remain on. Okay. All right, so there you have it. That's our Aussie dollar. I do think that this will not trigger. So if you need to go back and check that level there to see if it triggers or not. Okay, let's move on. Let's have a look at the Euro USD. Euro USD, it's just getting even more narrow. It's starting to feel like it's wanting to become a converging triangle. Look, I'm not happy with this pattern at all. Look, my moving averages they're crossing over constantly. It's just a chart that I do not want to interact with, so I'm going to do that and leave it alone. Okay, so nothing for the Euro USD this week. Another question that's popped up. Lois, yes. Lois is asking, do I need to turn off the sleep mode? If your computer goes into sleep mode, guess what? It's gone to sleep. It's not looking at your trade anymore. So your computer must not go into sleep mode. Okay? You can turn off your screensaver can come up and things like that, but it cannot go into sleep mode. All right? Otherwise, it will not do the algorithm. Okay, so Euro USD, nothing. Let me move along. Let's have a look at the US yen. Okay. Did anybody take the engulfing candle here? Anybody? Show of hands. Let me zoom in a bit better so everybody can see it just a little bit better. Engulfing candle, very typical pattern. Now, I took this one. I took the inside candle like a week before or a few days before, and I got stopped out. And that was one of the trades on the daily call. I got stopped out on that one. But then, if you look around, this is the next setup. This is an engulfing candle, and on this occasion, you would have hit your targets on that one. So I took this one, and I got stopped out. I didn't take this one, and I missed out. So if you're having that problem that you're taking some and you're getting stopped out and you're missing out on some and they're the ones that are winning, then you need to address the situation regarding cherry picking of the trades, or maybe, for example, you might have a rule that says I do not take the engulfing setup on a trend, and then that's okay, because if that's your rule, then that's okay. But just be aware of it. So I didn't even see this one, so I don't know where I was. I did not see this one at all. So did I? For those of you who look at the daily call regularly, was this in my charts last week at all? Because I do not remember it. I remember this one because I got stopped out on it, but I don't remember this one. So, all right, not to worry. I've missed it, or I might have seen something better on that day that I liked. But it doesn't matter. Okay, so what do we have now? Oh, quick question while we're still on topic. I'm just being asked, what about the inside candle here? Am I allowed to trade that inside candle like that? Yes or no? If you know the answer, or if you think you know the answer, give me a yes or a no. If you have no idea, just give me a question mark. There's a lot of new people in the class, and I just want to see where we all are. So I don't want to leave anybody behind. Okay, Lois, Dennis, Rav, correct. Andrew, correct. Okay, the answer is no. It is not a setup because the fractal is on the bottom side. So this would be a trade if I'm trying to go that way. Okay, so I'm looking for a high. So when we're in trend, which this is what this is, okay, when we're in trend, what we're trying to do is pick these points here, pick that point so that we can shoot in the downward direction. So this one here is not at the high part, okay? This one here was, when nothing to the right hand side existed, it was the high one, all right? So that was a valid trade, but this one's no. And if I was looking to try, I don't feel that was enough resistance to try and trade it in that direction either. Okay, so the answer is no. So yes, it is an inside candle, but it's not a setup for us. Okay, so look, this one here right now, it's unfortunately, well, we have to wait for it to come back up again, show us that setup again, and then we can continue with the trend. Okay, so that's the only thing on offer with the US yen. So that's all we have. Let's move it along. Let's have a look at the US CAD. Okay, we were trying to get a trade off this line. It did provide I can see an inside candle set up right there, but it's gone through that line, so I don't think that was a correct setup. Let me go to, that was the daily chart. Could I have stretched it a little bit? Oh. Look, no, I would not have traded that one. Okay, so as much as I would have liked to, it's just too far, so let me delete it. Okay, so are we in trend upwards? What we could look for now is if today's candle, this one here, remains inside, we may have a setup tomorrow as such where we have an inside candle, and then we could attempt to trade the break of the candle in that direction. Okay? But we need to wait for today's candle to finish, and let's see if indeed it does finish as an inside candle. So that's the US CAD. All right, let's have a look at the GBP USD. I'm going to get rid of these. I don't like it anymore. Let me zoom out a bit. Let me see what I can see. Okay, we're going to get an opportunity possibly to trade a double top. So let's draw it in. So I think this is the most likely trade that we're going to get an opportunity to trade. So what we're looking for is somewhere in there. We're going to look for price action reversal so that we can trade in this direction. So if anybody newer in the classes, what we're looking for is something that looks like this, a little inside candle, and then on the break we want to trade it as such. So draw that line in, leave it on your chart, and let's prepare for it. That's the most likely next trade that will appear for us. Okay. Also, be on the lookout if it doesn't get there and it starts to pull away right now, and then if it produces something here, we could possibly attempt to trade it there. I wouldn't really necessarily, forget about that one. No, I'll change my mind because we wouldn't technically be in trend yet until we break that, because it feels like it's just stalled a little bit. I think the better trade is going to be this one here. All right, so let's look for it and let's see if it pops, if it shows itself. Kiwi dollar. Okay, let me get rid of these lines. They're no longer relevant. See, sometimes if you have a look at this on a daily chart, these lines look okay to me. Where I've got one touch, two down the bottom, one and two, looks okay. So I would be happy to look for a trade over there, back in that direction. That's what I'm looking for specifically. Okay. When I jump into a 4-hour chart, I'm basically trying to look for the same thing, but on a 4-hour chart, it doesn't look as good. You can see on my 4-hour chart, I have this section which has come out of the lines and this section which has come out of the lines. Now, and that's happened because on the daily, it was just a wick that went out and came back in. So on the daily, it's okay, but on the 4-hour, I would not use this pattern. So if you ever want to drop down time zones and you're thinking, does it look good, does it not look good? This is some of the things to notice. So on the 4-hour chart, I would not call that a touch, and this one has gone too far as well. All right, so which basically means let's go back into the daily, zoom in, and on my daily, I would consider a setup if I got it over here, because it's only the wick that has come out, it's only the wick that's come out over here. Okay, does that make sense to everybody? So let's look for some price action reversal at that line. All right, let's move it along. Let's have a look at oil. Whoa. Oh, it's a 4-hour chart. Okay. Okay, the first thing I want to do is I just definitely want to drop that across. Okay, what am I looking for? What's the most obvious trade that I'm going to look for here? Anybody? Let me zoom out. Let me give you a hint. What's the trade that I would be looking for? Okay, everybody's got the direction right, so I'm looking for a short. The reason for the trade would be I want a double top. Okay, so and I know we've actually triggered quite a few double tops and double bottoms this year, and this is the correct way to do it, where the price comes from underneath, hits a top, does something, and then hits a top. Okay, a lot of times people confuse them, and what they'll do is that it'll be like the market comes from the bottom, and they say hits a top, hits a top. Now that can work sometimes, but that's technically not the correct way to trade the double top. You don't want it to come from a higher point. You want the tops to actually be tops, and the same is for the double bottoms. Okay, so let's look for that. I think we need two candles. We need today's candle to finish, and today's candle is already touched, so it looks like it could set it up, and we need for tomorrow's candle to finish as well to see if we have a setup or not. So put that one on your charts to watch. It's WTI oil on a daily time scale. Okay, let's have a look at gold. Okay, we'll stick with the lines that I've got drawn in. Did anybody by any chance, let me see what it looked like. No, it's, oh. At first glance I thought there was an inside candle there somewhere, but there isn't, so there's no setup. So what we can look for here is we can try to do a triple top. Okay, so let's see if it gets there and can provide us with a triple top option. All right, it's really the only thing that's on the cards for this particular chart, the way that it's setting up right now and how it's looking. So let's see if we can get the opportunity to take that trade there. Okay, so that's gold. Pretty simple, that one. ASX, I said I was going to stop looking at the ASX. So let me swap it for the S&P 500. What's that look like? It's a little bit smoother. Okay, all this volatility here, guys, the market dropping quite a lot for Thursday, Friday last week. This all came about due to the trade war essentially between the US and China. So currencies it's affecting the markets. Okay, so this is one of the main reasons that this is occurring. So what we've got to look for is, do we have an opportunity to take advantage? Let me get out my fib tool. I was trying to do something with my platform and I accidentally reinstalled it, and I've lost everything. I did this like about 2 minutes before the class started, so I have to reconfigure some of my stuff. Lucky I was able to upload my templates really quickly. Okay. Okay, what I was looking for was I was just wanting to see where the 161 Fibonacci extension from this level up to that level was, and it's here. Okay, so I thought it might have been there, so I would be looking to get a buy in there, but it's not. It's lower. It's actually closer to this bottom here. So what I was planning on doing, I won't. So let's leave this one. Okay, let it settle in. Let's see if we can get something else out of it at a later date. Okay, there you have it, guys. I think I've covered all the majors. So if you have any questions, just type them in. Let me see, and I'll see if I can help you. Recapping, we've got a pending order or a stop sell on the Aussie USD to trade the break of the inside candle, continuation of trend downwards. That's the reason for it. Euro USD, we are in the middle, in no man's land, so we're not doing anything. US yen, we have breached down. We've got to wait for a pullback and attempt another trend continuation trade. US CAD, we need to wait for today's candle to complete. If it completes as an inside candle, we do have an opportunity to become buyers tomorrow. Pound US, we're waiting to see if we can get a price action entry on a double top. Kiwi dollar, we are going to see if we can get something off this top line, which is a falling channel or a sloping down channel. WTI, we need to wait for tomorrow's candle and see if we have a double top situation. Gold, we're going to look for that triple top. S&P 500, we are doing nothing. There we have it, guys. Any questions? Does anybody want me to have a look at something? Anything that you encountered during the week that you needed assistance with? I'm more than happy to help you. I'll give you a moment to type it in before I wrap up for today. Someone's asking me, can I explain today's Aussie CAD trade? Okay, Aussie CAD. Oh, must be referring to the daily call. Let me just bring up an Aussie CAD. Okay, Aussie CAD. Okay, first of all, I believe I had a support line. So, for starters, let's pretend if this candle finished exactly where it is right now, tomorrow, that's a price action entry, and it's a bread and butter trade. Everybody understand that? Does everybody any questions on that so far? I'm looking at Aussie CAD daily. This was from today's daily call, and there's a straight, very, very nice support line. And I said, well, when I did the call, this little green candle wasn't there yet. So this candle's about 8 hours old right now. So if it finished like it is right now, tomorrow we would have a setup. The other trade that I was talking about was we've had 1, 2, 3, 4, 5, 6, 7 consecutive days in a row where the market has fallen. Now, this is a statistical trading style which I occasionally do, and with that method, I don't actually need any support. I don't need anything. I'm basically taking a probability that the next candle, after 7 in a row, that the next candle will be a candle of change of color and it will give me a short-term reversal. So the way, if I was trading that particular method, so first of all, the price action method has not been triggered yet. That can only be triggered tomorrow. The statistical method, let me zoom in even more so that I can. The statistical method, the way that I would do it is at the open of the candle, I buy straight away. Typically, I would place my stop about 30 pips and I would go for a target of 30 and say 60, something like that, where this would be my T1 and this would be my T2. All right, so there's no hard, fast, set rule in this. This is typically the way that I would look at it, but all I'm banking on is that it's been 7 days in a row, and there's a high probability that we will have even if it's a short-term reversal, it's a very short trade that I'm going for that target, and then I'm out of the trade. All right. Does that answer your question? Great. Anybody else? Any other questions? No, we're all good. All right, well, if we're all good, we'll leave it at that. Look, some of you would have received an email from CSC Traders giving you access as a gold member. So please go in, have a look. The layout's different, and there's a whole lot more material in there for you. There's a question being asked right now, general question, do you mainly trade the daily timeframes? For the Monday classes, Amit, I do look at the daily time scales. However, and for the daily call as well, because it's the only way that I can stay on top of the trade, because I need to wait for one entire candle to finish. So if I look at the chart again at the same time tomorrow, I never miss anything, and it only takes me about 5 minutes of my time to keep on top of it. However, I've been trading for an extremely long time, and for many years I traded London session of 5-minute charts. So if you're a gold member, there are strategies in there which are shorter time based, so we've put in a variety of strategies to assist everybody, whatever time frame you want to trade. Okay, so the answer is for this class, yes. However, if you do have a question based off anything else, a strategy that you've seen in there, feel free to ask it at any time, and I'm happy to deviate a little bit to answer your question, because the chances are that somebody else has got the same question. Lois, if you haven't received an email, I will personally send you an email with the invitation. Okay, so I'll organize it for you. Any other questions, guys? No? Alright, let's wrap it up. I hope you all have a fantastic trading week. Keep watching the daily call. If you have any questions, just email us as normal, and I try to do my best to assist you as we go along. Paul, yes, I can email you. I think I emailed you, Paul. I don't know if you received it. I'll send it to you again with the logins. Okay? All right, guys, have a great question. One last question. Trading challenge question. Okay. The way I'm going to do the trading challenge this year, I will do it one-on-one with each of you who wants to participate. So you need to tell me what strategy you're trading, okay? And then I will do my trades. If you happen to be doing the same strategy as me, we should be able to see the trades together, and we can pick them out straight out of the daily call. Okay, so if you're ready to do it, just send me an email that you're ready to do it, and I'll give you a clearer instructions for that. Okay, so all good. Dave, yes, you're on the list as well, and I believe I've set you up as a gold member as well. Okay. All right, guys, if you do have any questions, just email me and I'll make sure that I get back to you. All right, have a great trading week. Keep watching the daily call, and I will speak to you all next week for the weekly market analysis class. Bye for now.